All right, everybody, here we are. Welcome to Money Chat with Mike. And I'm not Mike, my name is Matt, but it's good to have on the line with me, and I'm just going to bring him up here beside me. Here is Mike. Hey, Mike, how you doing?
Hey guys, hey, I'm blessed and grateful. Doing fantastic.
And we got a bunch of people in here on the session already. Glad that you're joining us. And feel free to jump in the chat room. Listen, tonight is going to be a great opportunity to ask Mike some questions. So, we talked about it this past weekend at church. We said that sometimes people aren't really comfortable chatting about finances. But listen, this is a great opportunity to bug Mike with a few questions. And you can always say you're asking for a friend, right?
That's the best way to ask. Ask for a
So,
friend.
so just wanted to say thanks to everyone who pre-registered. You gave us some great input here in terms of where you're at. So that helped us kind of just see who we're talking to tonight. And good to note that we have a number of people who are here and they're employed, and that's the position that they're in right now, which is awesome. We have some people who are not employed right now, or other could be you're a stay-at-home parent, or you're in between work for other reasons. We also have a couple people who are here because they were let go due to COVID. And we just want to let you know that you're part of our community. We love you. We're praying for you. And we want you to see you through the season. We know that this could be a helpful event for you, even just as you mentioned that this is one of the reasons why we put this together. And let me just go through, Mike, if you don't mind. I'm just going to go through a couple of the what we have here from people would describe as the greatest money concern today. So for some of us, it's saving for a down payment, finding a job after graduation, how to invest for retirement, paying bills, organizing finances. We have some people who are saying that if the lockdown continues for too long, I might be in trouble, but I'm okay for now. Unemployed, trusting God, retirement, potential cuts, saving for a baby, some debt, paying the mortgage, investing for retirement, getting rid of debt. These are just some of the responses that we got. And one here, have no income, used up all my savings, having to rely on my family's income, and a very small retirement savings, and it locked in, and it doesn't mature until next year. So that's a tough situation to be in. And you know what? Thank God that we have this opportunity to have a conversation, and a reminder that God is providing for us in so many ways. And listen, I'm going to say this now, but if this is a situation that you're going through and you feel like you are absolutely beyond what you can handle right now, I just want to let you know that you can head over to onechurch.to/care, or you can email us or text us or call us, and our team will do what we can to help you get good resources and get connected with whatever you need to help you in the season ahead. But this is one of those things that we get to do. So Mike's going to go through some great information, some ways that we can do this season well, and we're gonna take some time throughout this conversation to actually open it up for questions. So thanks for jumping in and being a part of this. If you have any questions anytime, throw them in the chat just below the video, and I'll be able to monitor those and bring them up to Mike. So I think, Mike, we're breaking this into about 4 chunks, right?
Yeah.
Okay, so after the first chunk, just let me know, and I'll let you know if we have any questions in the chat room. But I'm going to turn it over to Mike right now. But thanks for being here, Mike, and take it away, my friend.
Great to be here. And like Matt said earlier, the best way to ask a question is to ask a question for a friend. And so, don't be shy to ask any questions. No question is, there's no wrong question out there. And so as we go through this material and as we start to talk about some ways to find some, I'm going to call it cash in a flash, because most people, they want to be able to find cash, and they want some real simple, practical tips on how to do it fast. Not something that's going to take them, 2, 3, 4, 5, 10 months and beyond, but something that they can start to implement even tonight and over the next couple of days here to start to find some more do some extra income right now with what's going on and all that stuff. And so this is stuff that I've had the privilege to teach us a couple times in the last, I guess, 6 or 8 weeks or so, last month and a half, 2 months. And really excited to share tonight. And so let's hop into the first one, guys. Let's hop into this first little tip here. And the great news about what we're going to talk about tonight is for some of you, you're going to be able to take action on 1, 2, or 3 things. And what we found is all the things we're going to talk about tonight, there's, they're little things, but when you start to take action on 2, 3, 4, or even or all of them tonight is when people start to see the big differences in having extra cash, having extra income. And what I'll do is I'll share some stories from my clients or even people I've talked to that have found ways to get some more money and free up some income during this time right now. And so let's hop in here. Let me walk into the first one. So grab your pen and paper and write this one down, and let's dive in here. So the first way that we found people right now have been able to really get dialed in and be able to save some cash here. And the average person doing what we're about to tell you here has found about an extra $250 on the other side, maybe $500 a month by doing this here. And this is what it is. It's called a cash flow plan. And let me walk you through that a little bit more in detail here, because most people think, oh, that's just a budget. And the truth is it's a little bit better and a little bit different than a budget. See, most of us, what happens is right now, statistically speaking, about 78% of Canadians are living paycheck to paycheck, and 78% of Canadians aren't managing the money. That's the current stats here. And what we found is most people haven't been taught how to manage the money properly. And what they've been taught is this kind of pseudo quasi budget. And here's kind of what we found most people kind of do is like they've got their income, then they list their expenses. And then what happens is they go out through the month and they swipe. The end of the month comes and it's like, oh my gosh, we've overspent. And then they try again for month number 2. Here's our income. Here's our expenses for the month. Swipe. Oh no, we've overspent. And they do that for a couple of months. And then they start to tell themselves things like, well, budgets just don't work, or my situation's too different. And the truth is, budgets do work, but we haven't been taught how to do them properly. Essentially, the way that most of us have been taught, I call it dartboard budgeting. And I don't know if you've ever played darts, but I like playing darts. And I remember when I was on my honeymoon, we were at this cottage, and for the weekend, all we did was play darts. That's all we really could do because it was almost raining the whole time, and so we couldn't do any of the swimming or any of the stuff we thought we would do. And so we played darts. And in this game of darts, the goal was to hit every number 3 times and then hit the bullseye 3 times. And so you know what I did? I literally aimed for the bullseye on every shot I got, and I made myself around the board, and I hit the bullseye a couple times too. But what happens is a lot of people, they aren't aiming in terms of the direction they want to go with their finances. And what's happening with most budgets and what most people are doing here is they're not, they're trying to aim for that one number, but they're missing it. Month over month, they're missing it. And it takes some precise fine tuning here to walk through that. And so let me walk you through exactly what a budget, AKA cash flow plan, should look like and why this is going to help you find extra money. All right, so this is what you do. At the beginning of the month, you sit down and you write down what you're expecting to make. So, 3K, 5K, whatever it is, 7K that you're expecting to bring home for that month. And this is actually perfect time because tomorrow's May 1st. So let's do this for May. Let's just say we're going to talk about May here. And at the very top of your budget, you're going to write, hey, from May 1st to May 30th or 31st, however many days you have in May, we're going to have this much income come through. And then below that, your goal is to give every dollar an assignment and tell every dollar what to do. And those of you that were at the training back in February, that's kind of what we talked about here. You want to spend every dollar in your budget, okay? And so what happens is you spend every dollar in your budget. All right, you give every category an assignment. You've got food, you've got auto stuff, maybe auto insurance, maybe a little bit of gas now, probably not much. You've got clothing, all this stuff, right? And the goal is to have your income minus your expenses equal 0. Now, that's where most people stop. And that gets them into trouble because what happens is the human condition happens, and that's called our habits, our behaviors, our lifestyle. Our habits and our behaviors get in the way. And so what we want to do is at the end of the month, we want to actually track what we've actually spent. And this is where the average person will find an extra $200, $250 to $500 a month. This is what happens is they said, oh, I plan on spending X amount of dollars in this category. And then what happens is they've realized they've spent X amount more or less. But a lot of times it's more. And so like food, for example, we think we're going to do this and we actually do this. Or eating out, when we're able to do that, we think we're going to do this and we actually did this. And what happens is the cash flow plan, if you do it that way, it's going to be like a mirror looking back at you. You do your makeup or you do your hair and you look back at the mirror and you can see that you got some hair standing up, right? Well, what do? You get the comb and you fix it and you make sure it's all good. And that's what the cash flow plan does for you when you do it that way. Because at the end of the month, it's like a mirror looking back at you and saying, hey, you said you were going to do this, but you actually did this. And what happens is most people, it causes them to bring what they actually do down to what they want to do. And that's where we found the average person doing an extra $250 to $500 a month.
Awesome. That's a super practical, easy tip, Mike. Again, just a reminder, friends, to throw any questions. We've been a little quiet so far in the chat room, but any questions about cash flow planning, feel free to throw it in there. And Mike, I'd say let's just jump in with tip number 2, and people catch up with a question from number 1.
We'll get into that. Yeah,
we'll get into that as people are processing.
Yeah, and let me help address those who have lost income right now, because that's something that's happened. Or maybe you're getting a CRB here, the CERB benefit here with a couple $1,000s a month. For those who have less income than they have planned to, or they've lost income, or they're relying on external resources here, what we teach is this process that we call the 4 walls. And it's the four walls of the financial house. It's the 4 things you want to take care of first, no matter what. And here's what they are. These are the top 4 things you got to take care of first. Everything else is secondary after this. First one is your rent or / mortgage or your utilities. So let me say that again. If you're renting, it would be your rent and utilities. If you own, it would be a mortgage and utilities. That's your first thing you got to take care of, no matter what. That's your first priority. Second priority is food. You got to have food on the table. Now, we're not talking like filet mignon and all that stuff, basic food for the family, basic necessities for the family. The next thing we're talking about is transportation. So car insurance, gas, all that stuff that you have right now. And the fourth one, and this one most people can go a while, can go a couple months without, but we do include this one because eventually you'll need this, and it's clothing, basic clothing. And depending on the season you're on, you may need to buy some more clothes, or you may need to shed some clothes. But if you take care of those 4 things first, everything else is secondary. And everything else can wait, and everything else, you can work a plan for later when income gets back up and when life gets back to normal. But those 4 things are your main things right there.
That's solid, Mike. That's a good prioritized list.
It keeps things in perspective, right?
That's good.
Awesome. Okay, so you ready for number 2?
Let's do it.
All right, number 2, and this is we found this to be very, very valuable for a lot of people that have done this, and it's called tax returns. Now, if you get a tax return every year, what that means is you're giving the government more money than you need to give them. And you might be thinking, well, what's wrong with that? Because once a year I get this big check and it's great. It's like a forced savings account. And I would agree, but I would argue back and say it's a forced savings account that gives you 0% interest. And in fact, if you include inflation over the course of a year, you might even be losing when you calculate that into it. And so here's how simple this is, guys. Tax returns really just mean that the government's overtaxing you. Is essentially what that is. And because they've overtaxed you, they're now giving you a return on the money they've collected. And so what we found for a couple quick wins for a few of our one-on-one clients and for other people is if they were getting a tax return, we've had them adjust what we call a T1213 form. Now, T1213 form, basically what it is, the nut and bolts is basically just saying it's asking the government to reduce taxes at the source, aka reduce taxes off what's coming on your income, your T4 and all that stuff. An accountant can do it. HR can usually do it for you as well. And so let me walk you through kind of how simple this is. If you get $1,000 tax return every year, that's $83 more you can have per month. Okay, if you get Yeah, it's good, right? It's a week of groceries for some people. It's a tank of gas or a couple tanks of gas now. And it can actually be it can be beneficial quite a bit. But $1,000 is not the norm. Most people are getting $3,000, $4,000, $5,000 tax returns, is what we're seeing the majority across the country. And so let's look at this. Look at it this way: if you got a $2,000 tax return, that's an extra $166 a month.
That's solid.
3,000. Let's just keep doing this simple math. $3,000. That's $250 more you can have per month.
And if you're investing that right away, that's when the insurance starts the interest starts helping, right?
Yeah, exactly. Yeah, if you're $250 a month can grow to be quite a bit of a chunk of change, especially if it's invested well over time, right? Or it's 2 weeks of groceries for a lot of people.
Yeah, that's
half a month's worth of groceries, especially right now, right? It would be half a month. For a lot of people, like be half a month or a week's worth of groceries. And let's just do another one here. $4,000. That's $333 a month.
Sweet.
So we found that to be a very quick win and a very effective way for people to find more money very fast, simply because you can literally go and request tomorrow. Go to your HR tomorrow. Now it's tax season now. Talk to your accountant now. And you can have that form adjusted pretty fast. You can start bringing more money home pretty fast. Within the next pay period or two, you would have more money in your account if you were to adjust your form that way. So that's been a quick win for a lot of people as well.
That's awesome. Sweet. If anyone needs any clarification on what that is or some help, feel free to message us. Wow, we just got our first message from Emily. All right.
Woo!
Is this something we ask for our accountant to fill out when we do our taxes?
Yeah, when you're doing your taxes, you can ask about it. They don't always fill it out for you. A lot of times they give you the form and you bring it to HR, because it's really who the person that needs it is the person, aka the company, that's taking taxes off. Right. And so your accountant will give you the form to give to HR.
So a couple of things there. One is your tax bracket is kind of figured out by whoever's handling finances at your employment.
Yeah.
And they're giving a chunk right off your pay stub to the government every month. And so they're the ones who would adjust it, but they need that form to be filled out to do it.
Exactly.
And so the second thing, just to clarify, Mike, can you do this any time of the year, or does it have to be done at tax time?
You can do this any time of the year.
Okay. Awesome.
Yeah, so if it's October and you're watching this in October, you can go and request to have your taxes reduced. And to bring it back to your point there, Matt, your employer, they're pulling payroll taxes based off what they assume you're making with the company. Right. Based off your tax bracket with what the company's paying you. What they don't know is, if you do extra giving, if you're investing, if you give to charity or whatever it is, all that stuff reduces the amount of taxes you pay.
Right.
And so, they may be taxing you, your company may be taxing you appropriately to what you're making, but because you've got all this extra stuff outside that they don't know about, that's when we start to see people get overtaxed.
Got it.
Or if you've got multiple kids, and there's a whole bunch of different things that can happen there. But a good accountant can help direct you there with the right forms, and your HR department would be the one to take action and have all the taxes reduced properly.
So basically, whatever your accountant would be asking you if you were doing your taxes at the end of the year, or if you're filling out your own taxes, if you're doing that, whatever you'd be claiming as possible tax benefits, then those are the types of things that you'd want to be able to take advantage of all year.
Yeah, exactly. Yeah.
Great. So great question from Emily. Keep them coming. Let's jump into tip number 3.
All right, guys. So let's talk about this one here. This is a big one, especially right now. This is a very quick win. I just got an email from my auto insurance company who has decided to give me a 10% discount. Woo! Because I'm not driving.
Yeah, there you go.
And I don't think it's enough, so I'm going to call them and ask for more. But What leads us into our next point here is we want to go right now and shop. If you have an auto insurance policy, go and go and ask for a discount. With you not driving right now, with the amount of drivers that are not on the road right now, you're probably paying too much for your auto insurance. And like I said, my company just offered a 10% discount off our insurance. You might be able to find more than that or less than that, depending on who you're with. But right now, essentially, if your car is parked, or if you're driving like less than half of what you were driving 2 months ago, you deserve a discount on your auto insurance policy.
That's awesome. You're paying for driving that you're not doing, right?
Yeah, exactly. And they're charging you based on driving for you're not doing, right? Because when you go and originally sign up for your auto, one of the first questions is, how far do you drive?
Right.
Do you drive into work every day? For you, so if you drove into work every day, and let's just say it's a 50-kilometer round trip, and now you're like staying at home and the car's in the driveway, there's really no risk on them insuring your car right now.
Yeah.
The only accident you might have is a bike running into your car or something. I mean, there's virtually there's no chance of an accident happening, right? And so we found for a lot of people right now, doing that has helped them find some extra money.
That's awesome.
Now let me expand on that. So right there, do that, and you'll probably find at least 10%, maybe even more. So 30, 40, maybe $50 a month. And in some cases, you might find even more than that. But that's a quick way. And almost every auto insurance company in Canada is doing this, simply because the government has kind of forced them to. Mm-hmm. The government's kind of put a heavy hand down and said, "Hey, auto insurance companies, you need to offer a discount. You need to offer a reduced policy for those because of COVID and no one's driving."
That's good.
So that's happening right now. So if you haven't done that yet, go and do that. Like, call them as soon as we're off this call, type of thing. Like, as soon as you can, give them a call and see if you can get your rates reduced for the next month. Now, let me talk about the next side of things. The next side of the coin here is this. If you aren't shopping auto insurance annually, there's a good chance you're paying more than you should.
That's a good tip for any season.
Yeah, exactly. When times are good, when times are bad, shop your auto insurance. You'll be glad.
I love the jingle.
So here's the reason why. I've got a few really good friends in the auto insurance industry, and they've kind of they've shared the secrets. And this is what they said: most insurance companies, what they do is they offer the big discounts on the front end to get you to sign up. Mm. But what happens is, once you've been with them for a couple years, the discounts start to roll off. And maybe you've noticed your insurance kind of rising little by little over the years. What happens is they stop incentivizing you to stay with them. And so what happens is, what we found is, if you'll shop your auto insurance annually, you'll be on top of all of the best deals and all the best discounts you can get.
That's good.
All right, so that's a big one there. Also, let me give you this other tip. If you got a pen and paper, hopefully you're writing all this down. We highly recommend that you shop your auto insurance with a broker, not a captive agent. And here's why. Very simple. When you hear the word broker, essentially look at a broker as someone who has the opportunity to shop multiple companies at once. And what they do is they take your situation, and they put you in front of 4, 5, 6, 7, 8, 9, 10, sometimes 20 or 30 different companies, which means these companies are bidding to get your business, which means they're dropping their rates to get your business. Where a captive agent, a lot of times what they do is they've got one insurance product. It's the product they sell for the company they work for. And there's nothing wrong with that. But if you don't fit the mold exactly, you're not going to get the best rates. Yeah, and so a broker's been a great way for you to have some extra savings with that.
That's good. Now, Mike, I don't want to throw you off course, but maybe you could give us just a couple tips on how to have that conversation. If you're like some people I know, I'm calling for a friend.
Yes.
It might be a little bit difficult to negotiate. Maybe haggling or that type of negotiation isn't something that comes naturally to us. Yeah. So, do you have any tips on that?
Yeah. It's a simple conversation. It doesn't have to be confrontational at all, and it's very simple. And so, what we would have done had we not gotten that email a couple of days ago, it would have been simple. We call our insurance agent. So hopefully you have your agent's number. If not, call the company and ask to speak to someone regarding your insurance. And it's simple. Hey, Matt, it's Mike Croft here. We've been with AYZ Insurance Company for a couple of years now. In my case, we've got a great driving record, no claims. Right now, because of COVID, we're not driving into work anymore. We're actually working from home, and our cars have been parked for the better part of 6 weeks now. I know the government has talked about possibilities in terms of lowering our insurance. What can your company do for me?
That's good. You need to write that down if you haven't already. That is a money line.
That literally is the money line. Yeah. Try and stay away. If you can, try and stay away from yes and no questions, yes and no answers. And, what can you do for me? It can't be a yes or a no. It's got to be it's more of a dialogue happening. And I think you're going to find, for the most part, it's going to be a very simple, yes, Matt, we can do X, Y, and Z.
Right.
Great.
Okay.
Let's do it. And we'll keep you up to date when we go back to work, that type of thing. We'll call you when we go back to work to update our insurance.
Okay. That's good. And you'll probably want to make a note somewhere on a reminder or something so you don't forget, so you can keep things up to date. But maybe when you call them back, you can still ask that question.
Yeah.
Go back to work.
What can you do for me? What can you do for me? Especially if you've got a great driving record, even if you don't, by the way. And let me share this quick testimonial. And they may be on the call tonight, actually. We had a client a while back here who I thought they were paying a little more for insurance than they should have been. And so I said, guys, let's go get this requoted. Let's see what we can get you. Let's see what we can save you guys and see if we can do anything. And here's the good news. If they can't help you, they'll tell you. And that's it. That's the conversation. They won't haggle you and all that stuff. They'll say, we can't help you. You got a good rate. Stay with your current company. But if they can help you, they'll show you exactly how. And so this one person in particular, they saved an extra $91 a month.
That's significant, man.
And here's the best part. They had 2 at-fault accidents.
Wow.
And they still were able to save $91 a month, just over $1,000 a year here, just by going and shopping their insurance. That's
solid.
Yeah.
Okay, Mike, we got a couple questions coming in here.
Cool.
The first one is we'll go kind of in reverse order. First one, Emily's asking, do you have any tips on how to find a good broker?
Yes, I do. If you're in Ontario, which I'm going to assume everyone is on this call, but you might be out here. I've spent a lot of time trying to develop some really good relationships with brokers, people that I trust, people that have the heart of a teacher, and people that I would send my mom to. That's my 3 criteria right there. Can I send my mom to them?
That last one is legit.
Yeah, sure. Can I send my mom to them? Do I trust them? Do they have the heart of a teacher? And are they good? And so I've developed. I've got a few people in Ontario, actually across Canada, but we've got a few in Ontario that have been really good. And so if you're interested, I'd be happy to introduce you to them. All you have to do, if you go to moneycoachmike.com/provider, you're going to be able to do that there. Or you can just send me an email. So Emily, I'm not sure if we know each other, but if we do, you've got my email. Just send me an email, and I can introduce you to 1 or 2 brokers that can serve you well. Actually, I'll tell you this one story, and then we'll move on here. I had a friend that was looking to get a quote back in October, and I sent them to my buddy here who worked for an auto insurance company at the time. And I just said, can you give these guys a quote? I think they might be paying too much, but can you help them? And he went and quoted them. He did see that they were paying too much, but the companies he quoted them with weren't able to do any better. So he called them up, told them that he couldn't help them that way. But what he did is he said, if you go back to your insurance company and do X, Y, and Z, you should save some more money.
Okay.
And so even though he wasn't able to help them directly, he still showed them how to save some more money. I was like, dude, you have the heart of a teacher. I like that.
There you go.
You are my friend. Yeah. And so we've got a few people like that. And that's kind of how these guys are. Like, if they can't help you, but they can see you can save with your current company, they'll show you how to do that as well.
That's awesome, Mike. Thanks for sharing that resource. I've just thrown that link into
Cool.
our chat room. So if you're interested in finding someone, that'd be great. We got another question from Charlie, and
Yep.
he's saying we usually do an online survey through Insurance Hotline, and
Yep.
we have car and house insured together. Would this be equivalent to a broker? So that's their question.
Through who? Did they say hotline?
Insurance Hotline. I think that's the name of the resource.
Yeah, and so I think what they're doing, and I haven't used Insurance Hotline myself, but I think from what I understand, what they're doing is they collect your information, and then they sell it to the best bidder. And so you might get a broker in this equation here, but you might not. And I'm not 100% confident you are or you aren't. I haven't used that to know or be able to give you an answer on that one.
Okay, so Mike, is there any risk in trying to connect with a broker? Like you just mentioned a really good story for us to keep in mind here, that someone was already with an insurance company. They called a good broker, and that broker said, I can't do better, but you might even be able to do better. Go back. And they stayed with their current insurance company. So
Yeah.
I would say if you have any questions around that, maybe contact one of these brokers and see
Yeah.
if you can get any information or maybe a possible benefit there. Madge is asking, we got a couple of questions from Madge, and one is from a previous question, one of our previous tips. So
Yeah.
maybe we can knock this off quick and then come back to her second question.
Mhm.
If I am self-employed and do not pay tax, how does that fit into the T1213 equation?
Okay, good question. Now, maybe I could ask a question back, and if she's still listening, are you incorporated or are you a sole proprietor?
Okay.
So that's my
But
question back to you. But let me kind of vaguely answer that until we hear back as to what they are. As a sole proprietor, you're not going to have a T12 form to fill out. That's just for T4 employees. As a sole proprietor, you should be collecting your taxes and putting them aside. And so, depending on how much you make, the government's going to either require you to do quarterly payments or pay them once a year. And so what we've done in our business, because we're the same way, we're sole proprietors, is the government hasn't told us to do this yet. However, I feel like they're going to tell us to do it this year. We've literally put our taxes away in one account, one big savings account. And so month over month over month, it builds up. And it's a high interest savings account earning us 3%.
nice.
And so that money's actually making us money right now. And then what happens when we do our taxes and we have all our write-offs and all that stuff that goes in the business, a lot of times the taxes we put aside, if we've been doing it right and writing off properly, we've actually got a surplus of money in there. And so we pay the government what they deserve, what basically they say we owe them in taxes. And a lot of times, again, there's a surplus in there that we'll use and put that somewhere else.
That's good.
So that's why we do it. As a corporation, it would depend how you're paying yourself. If you're, because as a corporation, you're probably going to pay yourself as a T4 employee, and so you do the same thing. If you feel like the corporation has to put too many tax money away for you, and you find you're getting a return every year.
Right. So, but let me just confirm one thing too, Mike. Madge is saying that she is not paying tax right now. So the only way to get any type of reduction in at the end of the year is if you are paying tax.
Yeah.
So if you're under the minimum threshold for tax, then you're probably exempt. There's nothing more you can do in terms of the T1213.
Yeah.
But if those other things work, Madge did reply. So she's working through an agency as a home daycare provider and does receive a T4 annually. So in that case, Madge, you should be able to provide that T1213 form to your employer, which is at this point, it's the agency.
Yeah, exactly. The agency is your employer. And so if you are getting a tax return, that's something you can give over to them, and they should be able to reduce how much taxes are being taken off your paychecks.
Awesome. We got a bunch of questions that are starting to roll in here, which is good. I'm glad to see that. If you have a question, listen, we've only got tonight once. So don't have any regrets after tonight. If you have a question, don't hesitate. So Yvette, hey Yvette, it's good to see you. Miss you. Is saying, I'm a health care worker and have been working lots of double shifts. You know what, Yvette, just wanted to say right here. Thank you. Thank you for
Yeah.
what you're doing. And in this challenging season, I'll be praying for you for sure. And if you have a minute right now, why don't you take a second and pray for Yvette with me? But she's asking, can you advise me of the best method on how to invest my funds? So maybe some extra income is coming her way because of these extra
I see.
shifts.
Yeah.
And any recommendations around that?
Yeah. And so let me walk you. Yeah. And so what I would say is for you, we walk through a process called the baby steps. And based on where you're on the baby steps, they'll tell you exactly what you want to do with the extra income. So let me walk you through what that is here quickly. Baby step one, we say gather $1,000 emergency fund. Money put aside only for emergencies, not for when the pizza guy comes and we ran out of money. It's for, when the roof goes or the alternator breaks in the car and it's like $1,000 repair. It's for a real life emergency. And so if you've got that put aside, great. Baby step one's done, out of the way. Baby step two is we really want to work a plan to becoming debt free. Debt freedom is huge. I mean, it's biblical. All through the Bible, we see God talk about, really a desire for his people to become and be debt free. And so we really want to work that here. And that's consumer debt, by the way, car, credit cards, lines of credit, that student loans, that type of stuff. So we want to work a plan to have that paid off and get all that debt out of our lives. Once that's gone, the next step is what we call your fully funded emergency fund. And it's simple. In Proverbs, it tells us this, that the house of the wise have choice food and oil, but a simple man devours everything he has. And essentially that's an agricultural scripture from an agricultural time. Let's fast forward into the 21st century here. What that really means is a wise person has reserves. Because we know, we don't know what's going to happen, what disaster is going to come upon the land, but we do know it's going to happen.
Well, come on, Mike. I think we're living in a season right now where the wisdom of that is being proven. So
yeah,
I'm totally with you.
And Solomon talks about that in Ecclesiastes, how to invest in 6, no, in 7, because we don't know what disaster may come upon the land. And that's what we're living right now. And so we really highly recommend a 3 to 6 month emergency fund, and that's 3 to 6 months of expenses. So if it costs you $3,000 a month to operate your household, food, mortgage, cars, insurance, all the stuff, X, Y, and Z, you want roughly $12,000 to $24,000 in that emergency fund just sitting there for a time like this. All right. Once you've got that out of the way, then let's talk about investing, because the next step is about investing. And it's about taking that money and growing it and building some wealth and really starting to activate generosity through that. And so for you, if that's where you are at, what we would highly recommend is you start investing a good portion of your income. We usually say 15%. Because once you're debt free and you got the emergency fund, for a lot of people, they freed up quite a bit of money there, and 15% becomes really easy to do. That's awesome. So we say invest about 15% of your income. We recommend working with an investment advisor. I'm not one. I don't do that stuff, but there's there's a lot of great investment advisors out there that you can connect with that can help invest your money into like mutual funds, into the stock market. And by the way, just a side note, right now is an awesome time to get into the stock market. Think of it this way, because there's a lot of fear around it and there's a lot of miscommunication and even misinformation around it. But let me simplify it for you. Think about it this way. You've just gone to the grocery store, or you're at the grocery store and you're walking by the meat aisle and organic chicken is on sale for $2.99 a pound. What do?
You get 3.
You get 3. You don't buy 1, you buy 3, and then you freeze them. And maybe if it's on for $2.99 a pound, you go buy a big freezer and you just buy the whole store out, because it's never been that low. It's regular $8.99 a pound, and you're getting it for $2.99 a pound. Essentially, it's on sale. And that's what's happening in the stock market right now. It's on sale. And so, we've had a negative, I think the furthest we've gone so far was negative 30. In a matter of weeks, it bounced up to negative 20. So anyone that got in 6 weeks ago saw a 10% rate of return.
Wow.
Now, I'm not saying instantly, within a couple of weeks, all your money went up 10%. Now, those that were there for, for years, they saw a negative 20% rate of return. It's all about perspective and when you get in. But, and so the market's doing a lot of this right now with what's going on. But what we do know long term is even though the market's doing this, it's rising.
Right.
And when you look at the long term, it's doing this. It just, when you look close, it's like this. Woo! It's like a roller coaster. And what happens on a roller coaster is, if you get off before the ride's done is when you get hurt, right? It's the same idea in the market. If you get off at the wrong time or you get off before the ride's done, you're going to get hurt. And so what we found is right now is a great time. If you are debt-free, you got the emergency fund, right now is a great time to invest and start putting money into the market. And again, if you're looking for some help around that, we've got some great guys across the country that have been awesome at this, that again, I would send my mom to, that I like, and they have the heart of a teacher. And so if you're looking for some help from there, it's the same link, moneycoachmike.com/provider, and we can connect you with a good investment advisor that can really help you there.
Great. So Mike, can you just go through those baby steps one more time?
Yeah.
I'm going to take a note of them and make sure I get them right and put them into the chat room here, but let's go through them one more time.
So baby step one is you want to get your $1,000 emergency fund. That's $1,000 put aside, and it's only for an emergency. Don't put it in your sock drawer. Don't put it in your checking account. Go and put that in a savings account that's separate from your checking, and you really only use it in the event of a real emergency, unexpected, that just happened to your life. I call it Murphy repellent. Anyways, there's a whole other story around that, and we don't have time to get into all of that, but that's step one. Step two is once you've got that $1,000 is now you want to work a plan to become debt-free. Consumer debt-free, so credit cards, student loans, car loans, lines of credit, that type of stuff, store credit, all that stuff, and you want to pay all that off.
Great.
Okay, and really work a plan to get that paid off for good. Most people can do it within 24 months or less.
That's awesome.
Okay. Now, once you're consumer debt free, this is step number 3 here, and this is a fully funded emergency fund. So this is where we take that $1,000 and we build either 3 months or 6 months worth of expenses.
Right.
And it's simple. 3 months, if you work a steady job, a job that's not going to go away, a job that you're still working during coronavirus, you probably can get a good 3-month emergency fund and you'll be fine. If you work commissions or seasonal,
or if you're a contract worker,
that can vary. Real estate, that type of stuff. You want a 6-month emergency fund.
Got it.
6 months of expenses put aside to cover you when life happens, when you're laid off, when an industry gets shut down, like right now. That emergency fund is really going to help peace of mind in your life there. Okay, so once you got that, you're on to step number 4, which is where we start investing 15% of our income into, we call it a retirement account, an RRSP, a TFSA, those type of accounts, and that's for the long term. That's for 20, 30 years down the road when we're ready to retire. That's what that money's for.
That's awesome. Great. Sorry, did I cut you off there?
You did. It's all good. Let me give you 2 more steps because we didn't talk about this, but let's talk about these 2 steps quickly. Step number 5, if you have kids, you want to start putting money away for your kids' college fund so they don't have to go into debt. They never have to live like we have, in the land of debt and honey. No, I'm joking. But, essentially right now going to college, all the statistics show that most kids will graduate with a lot of debt and very little income. And so if you can give your kids a big starting push here, a big hand up, and either get them through college debt-free or at least a portion of their college paid for by using what we call an RESP, Registered Education Savings Plan, what the government matches, by the way. So they'll put a 20% match on money you put in there, up to a certain amount. But 20%, that's free money, 20%. And so we recommend you do that after you start investing for yourself, and there's a whole reason for that. If anyone has a question, I'd be happy to answer that, but we'll skip past that right now. But that's step number 5. Step number 6 is you pay off the home early. Now that you've got yourself set up, now that you've got your family set up, now it's time to pay off that mortgage, become debt free, and then to move on to the best step, which is my favorite step, which is the step that as a Christian we absolutely love this step. This step is where we live out what I call radical generosity. When there's no more debt in your life, when you've got a wealth building strategy, when the house is paid off, you've got a lot of money and resources you now have access to you. And this is where you really get to live out. We're not just giving on Sunday morning to church, which is great, by the way, But now we're like, hey, that single mom that missed the rent payment because she lost her job, we're going in and helping her now. Or that mission trip going overseas that's really important and crucial to X, Y, and Z, we're funding that now. We're giving money towards that. And what we're really doing is we're trying to give money to where God's called our heart to be and what God's called us to be. And the best way to do that is to have no debt and nothing holding you back here. And so that's why we call the step number 7 the best step. And most people can get there. Definitely, they can get out of debt within 24 months, another 12 months to do a 6-month emergency fund. Then they're into wealth building and paying off the mortgage soon. A lot of people can do it within 5 to 10 to maybe 12 years.
That's awesome.
If they're really focused.
It takes dedication.
It takes dedication. It takes commitment, focused, and intentionality. But once you're there, man, you're free. Like, you want to talk about, gazelle intensity and being free. And I mean, you're there. It's awesome.
That's awesome.
Yeah.
Let me just clear up a couple things. Some good questions rolling in here. Madge was just asking about God getting the first fruits. I think Mike already mentioned that. From a pastoral perspective, bringing our tithes to God is one of the ways that we honor Him, and that's before anything. Anything, that's what we would teach as a church is a really healthy practice, and just being reminded that everything we have, the 100% is God's, and He's asked for 10 out of the 100.
The government asked for a lot more than that.
So just to clarify, if anyone was confused, Mike's baby step 4, investing and being generous in that step, but that's the opportunity to give even more. To have an opportunity to be generous in that season.
Yeah, and so let me clarify that because sometimes there's confusion around that. I mean, the basis off the top, and we did this when we were in debt. We did this when we were struggling. Is 10. We say as evangelical Christians 10%,
right?
And we get that from Malachi 3:10. That's kind of where that comes from. The first fruits, the 10% there. The tithe goes to the Lord, and tithe literally means 10%, right. Not 5, not 20. Tithe, 10th. That's the definition behind it. And in the Old Testament, I went to the storehouse, which is the New Testament church. It's the church in the New Testament, essentially. So that's where we kind of get that. And we always say, and again, if you guys want to download the cash flow plan forms, I've got a link I can give you guys here. And let me just double check what it is before I give it to you guys, because I might give you the wrong one here. But on those forms, what I was going to say is our first thing we have on the top of that form there is giving,
right?
Is tithing. It's like that's the first, and we've laid out our categories on purpose. By the way, we just didn't throw them up there, but we've laid them out on purpose in that order because we really do believe that the Bible talks about it. Oh, I think it's tools. That's why the Bible talks about it. Those who are givers. God, God, I mean, I don't want to make it magical because it's not, but there's a lot of scripture that talks about God really taking care of tithers. And there's a lot of scriptures we can point to here and walk through here. And I won't get into all that tonight. Let me just see if I can find my page here. Okay.
Is it tools, Mike?
Yeah. How did you know?
You mentioned it real quick, and I'm on your side already. So I quickly headed over. I'm going to put that in the chat room.
Put that in chat room. There's budget tools there. There's car buying guide. There's a coronavirus survival guide there. There's a bunch of stuff.
That's great,
there.
Mike. Thanks for being generous with that stuff. Appreciate that.
So go and get that. But to speak about the tithe, the first thing we do is we give 10%. That's what we really believe. And then what we do is we work the steps: emergency fund, getting out of debt, fully funded emergency fund, investing for yourself, for your kids, pay off the home. And then it's in step number 7 that we unleash radical generosity. And that's where we've seen some people commit to giving half their income away and stuff like that. And that's where that happens.
Right. And if you were with us last night, we were talking in the online community group about how much when we have a chance to be generous, it actually kills worry. And that's, I think, one of the side benefits of living a life of generosity, even when it comes to tithe. Doing that reminds our hearts, it reminds us that we don't own this, and our provider is taking care of us, and he is being even more faithful than we are when we're doing that. That's awesome. bunch of questions coming in here, Mike, and we're
Sure.
we're coming up almost to an hour. So you let me know. I think we have one more tip
Yeah.
that we're going to give out. So let me see if we can knock these off real quick, and then we'll jump into that last tip before we go for the night. Let me see where it went here. So right, I'm sorry if I butcher this, but Razel Abba Chua was asking about is it a good time to invest in stocks? And I think Mike might have already addressed that. Now is a good time to invest because the markets are in a lower position. So
Yeah, you remember Tony the Tiger? It's great.
there you
That's how
go.
I feel about the stock market right now. Yes, now is a great time to do it. If you are debt free and got the emergency fund, now is the time to hop in.
Awesome. Okay, another question from Emily here. Uh, she says, I'm thinking about putting my money into a high interest savings account. And she was wondering if you would recommend EQ Bank specifically. And she says it feels better than just letting my money sit in the bank with almost no interest.
Yeah, I'm not familiar with EQ Bank to be honest, but a high interest savings account. Don't be fooled by the name. High interest savings account is essentially what we call a money market account, which is essentially an account that's going to keep up with inflation. So probably 1.5, 2%, maybe 2.5. If you're really lucky, 3%. Is
Right.
what a high interest savings account is. And so if EQ Bank is offering that, that's great. Meridian Bank offers it for, I think I'm with Meridian. I think they're 2.5 right now. I saw Duca Credit Union offering something for 2.5 or 3 or something. Many banks have it. You just got to search for a high interest savings account. And again, they call it high interest. I feel like it's a marketing term because it's not really high interest at all. It's just keeping up with inflation essentially. But if that's what EQ Bank is offering, then that's a good place to start.
So what's the benefit of having it in a high interest savings account versus something that's more of an long-term investment, Mike? Or when do we know
Yeah,
when to put it into a TFSA or an
yeah.
RSP versus a high interest savings account?
Yeah. And so, yeah, great question there. And so let me say it this way. Essentially, you want your emergency fund in your high interest savings account.
Okay,
So
and
emergency
everything
fund,
else would
everything
be more
else,
long-term.
yeah, unless you've got like a short little project, it's like a $5,000 thing you want to buy in 2 months or 3 months, you would save that in a high interest as well. But if it's long term, aka 3, 5, 10, 15 years and beyond, you don't want that in a high interest savings account because it's not going to do anything for you in terms of growing and becoming more income like an investment account. So that's when you would want to go into an RSP or even a TFSA. And by the way, most people think retirement are RSPs, and that's great. But TFSAs have the same. It's a different vehicle, but has the same kind of a power as an RRSP in terms of investment returns.
And then the benefit would be when you do pull an RSP out at retirement, you're taxing. It's delayed tax,
Yeah,
right? So you pay tax when you're pulling it out of the RSP, but when you put it in a TFSA, you have already paid tax,
yeah,
and all the income based generated by that, you're not paying tax at the
yeah.
end.
Yeah, so at the end, you're not paying tax. So think about this one. From age 25 to 65, $500 a month invested into a good growth stock mutual fund, RSP or TFSA, doesn't matter. They both have access to a good growth stock mutual fund, can have the potential to grow to, when we've done the calculations, over $3 million.
Wow. So what was that? $500 a month?
Yeah, from age 25 to 65, roughly about a 10% rate of return. Now, over 40 years, it's very doable. 1 year, hard to do for sure, but over 40 years, actually, the market's done better than that over 40 years. But that's about $3 million, a little more than $3 million. Now, let me ask
Wow.
you this, and here's where the question, this is great. Would you rather have $3 million that the government can tax or $3 million that the government can't tax, and it's all yours?
It's a great question.
That's the difference between RSP and TFSA. And so I actually tell people to build up their TFSA first because you are limited as to how much you can put into one. Once it's max, then use an RSP because there's a bunch of other stuff that we won't get into. But when it comes to estate planning and passing it down to next generation, there's a lot of taxes that get hit on an RSP that a TFSA will avoid.
That's good. Awesome. Okay, so let's jump into tip number 4, and then we'll get to as many other questions as you have time for, Mike. I'm good to stay
Yeah.
around for a little bit, but if you have a couple extra minutes, maybe we'll come back to some more questions at the end. But guys, thanks. I love how they're pouring in now. We're feeling the time crunch, I think. So Mike, let's jump into tip number 4, and we'll get to as many questions as we can after that.
Okay, guys, you ready for this one? This is very simple, but very, very, very practical, and it works. We call it trade debt for cash. And here's what I mean by that. Right now, every statistic you look at, there's a bunch of them out there. McDonald's has done one, done in Bradstreet's one that's most cited, when people are talking about this, but we see statistics everywhere. Every single statistic, their number is different in terms of their outcome that they've come to, but they all show, every single one shows that you spend more when you pay with plastic over using cash. So what we said, and in fact, on average, we see 12 to 18% more. So let's do some simple math. Let's just say you're putting your groceries, your gas, maybe some eating out on a credit card every month. And let's just say it comes up to about $1,000 a month. If the stat is true, which it is, it's a behavioral stat, and you are paying 18% more by using credit over or plastic over cash, how much could you save if you just switched from using your credit card to paying with cash? 18%.
18%, man. That's a lot of money.
Potentially 160, 70, 180 bucks a month.
That's good. And we were talking about saving that. We were talking about that same type of savings would be, I forget how much if we were doing that cash back from your earlier tip. So that's a significant amount.
Yeah, that's quite a bit for the average person if they're doing 18%. But what we found is a lot of people spend more. And some studies found upwards of 300% more.
Wow.
They go to the store and they buy a bag of chips, and they buy a bag of chips for their buddy, or they buy a coffee for their buddy and their other buddy and their other buddy. And they originally went to spend $2, and that was a $10 order.
Yeah.
That's 400% or 500% more, right? And that's where we see that stat happen. But for the majority, it's 12 to 18%. And so what we found is, hey, get rid of the credit card in terms of using it as your way to spend. And for most people would say start using cash. Now let me address this. We live right now in a society where most people aren't taking cash for obvious reasons. And so what we highly, highly recommend, I do this, and so I'm preaching, I live what I preach, is what we've done is we've got a prepaid credit card. And there's a company we use. There's a couple of them out there. You can just search prepaid credit cards. There's Coho, there's Stack. There's a bunch of them out there for Canadians. And these are real physical cards. I don't have my wallet here. But the cool thing is there's no fees whatsoever on these cards. Unlike most preloadable cards, you got to pay a 10% or a 5% activation fee.
Right. Those are
big. Fee, blah, 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 blah. They eat up your money. These cards, no fees at all.
Okay.
And I can e-transfer money to them. I can e-transfer money off of them. Really very cool, very kick-ass in terms of how they work. And so I've been using those to make my purchases, because what happens is as the balances go down to zero, you can't spend anymore.
Right.
Like you can't go negative. It stops your spending. And so
Which is going back to your cash flow plan.
Yeah. Exactly. And it coincides well with the cash flow plan. And so that's what we've done, because we aren't using cash at the moment just because of what's going on. And so we've just kind of looked at the categories that we're going to spend our cash in: groceries, gas, eating out, clothing, medical, all that stuff. And we'll put $1,000 or $2,000 on the Coho card. And as we spend it, we just make little notes.
Okay, Mike, can you just give us the name of those cards again? I know that's probably going to be a question. And spell Coho for me. Is that a K?
Koho.
Okay, and what was the other one?
Get Stack. So coho.ca, I believe, or maybe it's .com. And then getstack.ca, I believe it is too. And Coho's Visa, GetStack's MasterCard.
Okay.
So it's a prepaid MasterCard or a prepaid Visa. And the cool thing about those two things, for those of you that are, let's say most of us are technology bound here, is what they've done is they have an app. And so I've got my cards on my app. And so they give me a virtual card and a physical card. And so I can literally, if I go and apply, by the way, it's not everyone gets accepted. There's no like applying and like, oh, we'll see if you get accepted based on a credit score. Everyone gets accepted because there's no debt involved.
Right.
And as soon as you get accepted, you can download the app and start spending off your app and transfer to the money on your app and all that stuff there. And so I use my phone as Apple Pay for those cards. My wife uses the physical card because she likes that better.
Okay, that's great. And Cheryl is asking, can you accumulate any points with those cards? Are there any points? I've heard your opinion on those points before.
Yeah.
It might be worth
points and the perks, eh?
Yeah.
So I'll say on the Coho card, I believe you can. I believe they give you 1.5% or something like that. So not like a credit card, it's going to give you 2%. On the Get Stack, I don't think they give you points, to be honest. I'm not sure. I don't really track, to be honest. Here's what we found, and here's why I don't track. This is what we found is those who go after the points and perks, like all the data points show that you spend more. Point and perk cards versus just regular credit cards that don't give you any cashback rewards, the spending on them is like this. Percentage-wise, they know people that get point perks are going to spend way more on those cards than those that don't have cards. And so what we found, and again, it's a behavioral thing, psychology, all this stuff that the credit card companies have studied very well. They know that when you've got points and perks, on average, you will stay in debt longer and you will spend more money with them. And so we just don't fool with that stuff anymore for that reason. But if you are looking for point and perks and a little nudge, the Coho card, I believe, is the one that gives it to you.
There you go. Okay. Anything else on that tip 4 before we jump into questions, Mike? I from a personal note, we heard your talk. Man, we're talking about 3 years ago. My wife and I always had trouble budgeting because I'm a digital guy and she's a paper girl, and she wants to do everything with a pen and paper. And we found that we just had to come up with something that worked for both of us. And the cash flow plan was such a good thing because then we took out the money every week. That was our budget. We put it in an envelope. I got my allowance, and then we actually found we were sticking to our budget so much better. Yeah. We were able to celebrate when there's a little bit of money in the envelope at the end of the week, and so we actually just ended up taking out less the next week, and that was a part of how we started saving up a bit. So that's my own life experience, my testimonial. It's a great way of doing it. But anything else on tip 4?
Yeah, I'll show this one last thing here that people can do right now is this. Every credit card company, or I should say not everyone, but the majority of credit card companies in Canada right now are offering a cut in interest rates. So if you haven't done that yet, go and get, if you're paying 20%, I think they're cutting it down to 10. Okay. But even better than that, go and get that done right away because you're saving half your interest right there. So if you pay $200 a month in interest, you're going to save $100 right there. Right. Like $100, off right there. That's a quick win. And like I said, I've got some friends inside the banks that called me when the banks were all talking about this and said, this is something they're going to roll out. Tell everyone you can. And so the majority of banks are doing this for people. I would say this, we've got another resource for a lot of people here that if you're interested in this, we've taught people how to go from 19% to a 0% credit card. Okay. In Canada, it's a little different than in the US. In the US, we can get it for 24 months. I've seen cards for 36 months at 0%. It's like crazy competitive down there. In Canada, we've seen 10 months is the average. 0% for 10 months. So some people, that's going to be an extra $500 a month. For others, it's going to be an extra $90 to $100 a month by doing that.
So we're talking balance transfer?
Balance transfer, but doing it the right way, doing it and making it the last time you do it. That's the difference. Right. Not just balance, And so we've kind of walked through. We've got the resource around that. If anyone is interested in that, again, moneycoachmike.com / we call it the Credit Card Accelerator. Okay. moneycoachmike.com / credit card accelerator. It's a resource we have. It's a mini course we've put together over about 8 days, teaching people how to do it well. We've got a negotiation script in there, how to negotiate with your current credit card company. We've used that script to negotiate our cable bill, our internet bill, and we got $50 off our internet bill. Wow. We saved $600 a year just by walking through that negotiation script with Rogers. It was Rogers, guys. It was Rogers. It was Rogers we did it with.
There you go. If you
And
can
so
do it with them, I guess you could do it with anybody, right?
you can do it with
Yeah.
anybody,
Yeah.
but we use that, and so that's a course that people have. If you want to go through it, it's 8 days. It's going to walk you through how to do all that there. But for some people, it's worked. Actually, for most people, it's worked. And if you do pay high interest, it might be a good option for you. Or just call your bank and ask for 0%.
There you go.
And they may just give it to you. If not, they should give you something. Again, the government's pressured a lot of banks to really help people out here, and so that's another option you can take.
Awesome.
All right, so I mean, you take all those tips, you're going to save a couple $100 and above.
Right. So let's just review. So we got tip number 1: start a cash flow plan. And we talked about that. That's basically a budget that actually works.
Yeah, manage money always works harder. Manage your money, and you'll be able to find some money there.
And with that, you mentioned the 4 walls that you need to pay for. These are the most important things that you should be the essentials, right? Rent, mortgage, utilities. Number 2, food. Number 3, transportation. Number 4, basic clothing. Then tip number 2 is tax returns, and that's the T1213 form that you can get to take that extra tax you're paying and put it back into your bank account every month. Tip number 3, shop your auto insurance. That's a great tip, something that you should be doing every year. And I really appreciate that. That was a huge help to us. And then we jumped into, just before we went to step number 4, we got to those baby steps, which honestly, guys, that was worth the price of admission, if nothing else. What a great financial plan. Number 1, get that $1,000 emergency fund. Number 2, get consumer debt free. Number 3, fully funded emergency fund that's 3 to 6 months of all your expenses. And number 4, investing, which is that roughly 15% that you were mentioning. Number 5, start getting money in a kid's college fund if you have kids. Number 6, pay off the home early. And you mentioned that if someone's really focused, they could do this in 10 to 12 years.
For most people, most people can have about 10 to 12 years to pay off that home. Yeah.
Number 7, radical generosity, and that's the exciting part.
Yeah, that's the best part. That's the most fun you're going to have in life. I was just about to say that's the most fun you're going to have in life, kids. But I mean, generosity. I mean, if there's anything we're on here on this earth to do is to be generous and just share. I mean, we're here to share about Jesus and the light of the world to everyone. But a lot of times, generosity opens that door.
Yeah. Opens that door. Reflecting what Jesus did for us, right? So
yeah.
Okay, number 4, the tip number 4 was trade debt for cash. So start using cash instead of using plastic. So guys, we're going to stick around for a couple minutes and answer some questions. But for those who have to take off, thanks for jumping in tonight. And I just want to say, wherever you're at, I hope that you're doing well. But if you're in a tough situation right now, reach out to us as a church, and we'll do our best to get you in touch with or connected to some resources if you're in a really tough spot. At the very least, we want to be praying and being community. And sometimes there's shame around finances if we're in a tough spot. And what a trap. It's something that we can reach out and ask for some help. If you break your leg, you're going to go get some help. So this is one of those things where if you're in a tough spot, don't just suffer. Let's get yourself some help and get healthy, and then we can be moving towards being in a positive place, right, and making a positive difference. But let's jump in, Mike, if we can, and just ask a few more questions, and maybe we'll do these rapid fire styles so that we can get to as many as we can.
Yeah.
And thank you for everyone who's been asking questions. So you can still slip one in there if you want to get one under the wire. So Faye is asking, what happens to the TFSA when you are over 70? Is there anything that that changes when you're you're over 70. I think that's what they're asking here.
Yeah, because with an RSP, you've got to start pulling from it. I think that's what she's getting at. Or actually, you got to convert it into. You got to convert it and then pull from it. The government makes you pull from it. Right now, from what I understand, you don't have to do that with the TFSA.
Okay, good to know.
A good financial advisor, though, will advise you on exactly what to do at that point.
That's good. And Mike, I think you mentioned we posted in the link that you have some recommended people there, the people that you said you would trust to send your mom to, right? And so that's moneycoach.com.
I don't tell my mom to them. I don't recommend them.
moneycoach.com/provider. Is that the right link?
Yes. Yeah.
Okay. And are there financial advisors in there as well?
Yep. Okay. Yeah, we've got financial advisor, auto insurance, we've got life insurance, we've got mortgage in there as well, and even realtors in Ontario. And accountants as well. We've got a couple of accountants in there as well. So we've got quite a few services available. And as you go through it, it'll just list off what service you're looking for. And you can just click on that one. Great.
Okay, let's keep going here. Cheryl is saying this is coming back to the cash for debt, trading debt for cash. What if you pay off your credit card every month completely? You're not carrying any balance. What is the benefit in cash in that situation?
Say that again. If you pay it off every month?
Yeah, you're carrying no balance.
Yeah.
No interest payments.
Yeah. And so again, even if you're carrying no balance, we found the tendency is to spend again that 12 to 18%. And so even, and again, most people carry actually a credit card balance, but for those that pay it off every month, and that was us, by the way, we were the guys that paid it off every month. And what we found is when we switched from plastic to cash, it rained down our spending even that much more. Because here's what happens, and this is a bit of the psychology behind it, is as you watch that cash dwindle, and I kind of joke about this, I'll say it this way: when we're at a restaurant, that black tray they bring you with the receipt and the pen.
Yes,
I call that Queen Elizabeth's coffin, because as you put Queen Elizabeth on there, she ain't coming back. Right?
That's
and
good.
So what happens, and this is all the psychology around what these studies have found, is when we physically have to let go of cash, it causes the pain threshold within our psyche to activate, and we don't want to. It's harder to let cash go than it is to spend on a credit card.
It's a very physical representation of what's leaving us.
Of what's leaving us versus what we're charging. And so that act alone, we found, especially in our lives, we found this to happen. And we find a lot of people that we work with, by switching, all of a sudden, like the overspending really does get dialed down quite a bit. And so even for those that pay it off every month, pay off their cards every month, there's a good chance you could still be overspending by that 12 to 18%. You just have the resources to pay it off. And so what we found is by switching to the other, it's like you'll see a big change happen there.
So that's almost like you're taking away from that radical generosity opportunity, as opposed to going in further into debt. You could actually be doing something that, if you had those two opportunities in front of you, if you could be generous, or if you could just pay a little bit more on whatever you're already spending on, like if you just get lured into that, you're actually robbing yourself from that generosity, or maybe even some deliberate choices that you've been making, investing or whatever.
Yeah.
Great. That's good, Mike. Thanks for clarifying.
Yeah, little death by 1,000 cuts, that whole thing.
Exactly.
You can win death by 1,000 cuts, you can lose, and it's all these little things that usually cause people not to win. And so that's been one little adjustment we found people made and seen some big success with.
Yeah. Okay, so we got another question from Madge here. I was told that with the TFSA, I'm only able to save a maximum of $5,000. So I think that's an annual limit. And you did mention that. And so I think you said, Mike, you can clarify, but start with that. You'd recommend maximize the TFSA and then move to the RSP and maximize that if you can.
Actually, right now, I believe, I'm just checking here, it's actually $6,000 right now.
Okay.
So it's up to $6,000 per year. However, if you've never invested, or if you've invested for the last 2 years, we have what they call makeup room.
Okay, that's
and right
good.
Now, I believe, and don't quote me on this, but it's up right around here. I believe it's about $72,000 of makeup room we have right now.
Okay,
So if you've never invested, you've got $72,000 of room you can put in there. If you've
That's a lot of
invested,
room.
that's a lot of room for a lot of people. If you invested 5K, let's just say you've done 20K, you've still got $50,000 worth of room. And again, it's roughly about 70. It might be a little bit more, 72.5 or something like that. I don't have the exact number in front of me because every year they change it and adjust it a little bit. But roughly about $70,000 you have of room. So you've probably got a lot of room still.
There you go. There you go. That's really valuable. Priscilla is asking, can you open tax-free accounts at multiple banks? And I guess if so, does that have any extra benefit?
Yeah, what are you looking to do, Priscilla? Here, no, I'm just playing. You totally can, totally can. You can, as long as they report, which they do, because it's all through the bank and it's legit. There's no benefits to having multiple ones versus having one.
Right. So you can't. It's not the number of accounts. It's not the limit on an account in terms of what you're saving. It's actually the limit on
overall
the tax-free benefits.
Yeah.
Which is
whether so you can have 10 accounts.
Yeah, RSP or tax-free savings. Those limits are for you as a person. No matter how many different accounts that you have, you can only get so much as one single individual.
Yeah, you can only get so much investment room. So if you got one account, that's roughly 72K. If you've got 10 accounts, that's probably 7,200 over 10 accounts.
There you go.
Right, like they aren't going to give you more. Plus, if you have a spouse, they get that amount of room as well. So you can both have, you both could potentially have about 70K, $72,000 each.
Right.
Of room.
And then if you have kids, you have that education plan and.
Yeah,
there's a lot of room to save.
Yeah.
Okay, Charlie's asking, I'm planning to retire at 60. Should I apply for CPP now or wait till I'm 65?
Oh, that's a good question. Without fully knowing your situation, it would be hard to advise, but I will say this. The longer you wait, the more you're going to get from CPP. So if you wait till you're 65, you're going to get a lot more at 65 than you are today at 60.
And that's just because 70, sorry, keep going.
I was going to say, if you wait till you're, 67, 69, or even 70, you'll get more then than you will at 65.
And that's because your principal is still generating interest.
And because you're gambling with statistically speaking, the government knows as people get older, right, they tend to die off. And so you're kind of gambling a little bit there. You're like, you may only get your CPP for 10 years if you get it at 70, or 15 years when you get it at 70, versus if you get it at 60, you could have it for 25, 30 years, right? So they've got to adjust accordingly. And so the longer you wait, the more you're going to get. However, every situation is fact dependent. And so without knowing the full situation and fully what's going on, it would be a little bit hard to give common advice over that.
So best advice probably is to connect with an advisor, get them to review your personal situation.
Yeah.
Okay. That's good. Okay. I think we got through most of them here, Mike. Yes, Yvette, in case we didn't mention this, to be clear, stocks it is one of the good options, but it really depends on where you're at and your risk tolerance and a bunch of other things. Talking to a financial advisor is a good next step, which you mentioned. So that's good. All right. Now, I think I got through everybody. Okay. So Cheryl's asking this question. How do you manage paying for airfare online without a credit card?
And I think, great question.
Go for it.
Yeah, great question there, Cheryl. And so it's simple. It's really simple. We have with our bank, we have what we call a debit credit card. And that we've used that for hotels. We've used that for buying airline tickets. In some cases, we've used it for renting cars as well. And what it is, it's a debit card that acts like a Visa, but it comes from your account. It's money you actually have. And that works all over online. So most banks do really well with it. I have found in my experience TD to be the best. I've tried Scotia, BMO, I've tried them all, and TD's been the best in terms of being accepted everywhere. I find Scotia's limited. I find BMO could be limited as well, but TD, I'm Amazon, airline tickets, hotels, car rentals. It's worked. The second option is if you aren't with TD and when switch over, would be your Coho card or your Get Stack card. Those cards work online as well for airline tickets, Amazon. Online, I use mine today online. I had a bunch of purchases today that came off it that were all online purchases. They all work.
There you go. So I hope hopefully that is helpful. And thanks for the feedback. Lots of people saying here that it was edifying, informative, and very helpful. And Mike, I've found that to be the case. And so thanks for being so generous with your time here with us tonight. And I missed a question. Someone's calling me on it.
Oh.
So DC, answer the question regarding car insurance. Okay, yes. Okay, so DC, I think I can answer this question from Mike. You're saying that you need car insurance. You're a 23-year-old male. Do you have recommendations? And that would be going to that resource page. Let me just go back and make sure I get this right. And let me just click on it to make sure it's the right one. Yes, I'm going to put that in the chat room again. So DC, Mike's got a resource there for you, moneycoach.mike.com/provider, and that will get you to someone who is recommended by Mike. He said only people who he'd recommend to his mom. So I trust Mike on that one. He's got some great recommendations there, and hopefully that's helpful. And we have another question. Where do you get a Coho card? So let me just quickly, I think you were saying it's coho.com. Let me just double check that. Thanks for waiting for this. I think Mike ran out of battery. He'll be right back. Let me just look at that. And while we're doing that, Coho card. DC, no problem. Glad you got it. That's fantastic. Kathleen, I'm just looking that up. And Althea, we'll get to your question in just a moment as soon as Mike can jump back on the call. I think his battery died or something. There we go. There we go. Okay.
Hey, I'm back. Can you hear me?
I got you, Mike. Thanks for jumping back in. Did your battery die or something?
My internet went down.
Oh, okay. Well, we got you now. So I'm looking into the question with Coho.
Yeah.
But Kathleen was asking. Nope. Althea, what recommendations do you have for persons who struggle with sticking to a budget? And I think probably number one would be that cash flow plan that you were talking about. But trade cash for cards or credit. I can't remember what are we talking about here. What do you say to someone who's having trouble sticking to a budget?
Yeah. I would say a couple things. Is it possible? Go get the cash flow plans, because it's possible that just the method you've tried or just the system you have just isn't fully there. Cash flow plan really does walk you through how to implement really well. The second thing is I would say this: really get in tune with your why. Why does it matter to you that you do your cash flow plan? What's at stake if you never get this figured out? What's the power behind it if you really get behind this and really dig into it? And I would say, and hopefully this is a bit of encouragement for you, what I would say is that the majority of people don't get it down in month number one. For most people, it takes 3 to 6 months of really doing this and being defiantly committed to doing it every month before it really starts to work well. Because what's happening is the way we do the cash flow plan is it really starts to reflect your habits, your behaviors, your lifestyle to you. And over a month, month one, you start to see, you get some of those aha moments. Month two comes around, you've kind of fine-tuned a little bit more, you've gotten a little bit better. but you still got some life that happens and you catch those. Well, month 3 comes around now and you've had a couple tries at it, so it's getting a little bit easier. But again, different seasons of the year, call for different things. And all of a sudden, where you started your cash flow plan in January, now it's springtime. And you're like, oh my gosh, I got to adjust for a bunch of stuff in spring. And what we found is if you'll be committed to this for 6 months, and it takes about, usually around months 4, 5, and 6 is where it really gets simple. You get the aha moments. It's like, okay, this is easy. I'm starting to understand what's going on. And then from there, usually for most people, it's about 20 minutes a month is all it takes after that. Because you know what's coming in. You know what you got a budget for the season.
Right.
We're budgeting different in June than we are in January.
Yeah.
And once you've kind of gone through that, it does get simplified. And so I would say, a couple things. What's your why? 2, become defiantly committed to walking the process for 6 months. That's once a month for 6 months.
Right.
And I do promise you it gets easier and easier and easier and easier. First month, it may take you 45, 60 minutes to get through it and do it. Maybe even longer. But by month 6, 20 minutes tops.
There you go. And it takes years to I mean, I should say this. You're never really done, right, Mike? Because every year things change a bit. If your employment changes, if you get a little raise, or if you start paying for Disney Plus and for Netflix, then that changes your budget. You've got to keep tweaking and being committed to that, right? Like otherwise it's not going to work. You can't just it's not one and done.
No, it's a journey, not a destination.
Yeah, and if you have that mentality that this is going to be something I'm committed to, it's a lot easier. I think I've gotten disappointed in some seasons where I expected I'll do my budget and I'll be done for a long time and I won't have to worry about it. But no, it's something you have to come back to and be ready to come back to. You have to budget
do it for the month. Yeah, exactly. You're right. Yeah, you got to come back to do it for the month. Don't do it for the year. Don't try and do it for 3 months. Just stick to 1 month at a time.
That's good. Well, I think that's a good spot to end. That's encouraging. Mike, really, really positive. I love having these conversations with you. And even every time that we get to have you connected with our church family, you bring such reason and wisdom, but you do it from such a good place. And you make it, sometimes we can get so fearful around money or so worried about it. And you bring it to such a place of what the options are in terms of being positive and action oriented. So I just want to say thanks again for being a part of tonight. And you've shared a lot of resources with us, and so I'm sure many people will be taking advantage of those. And for everyone who's watching online, love you. Have a fantastic night. Again, if you need anything, if you want to, whether it's financial concerns that you have, we're as a church, we don't exist to provide for financial concerns. We do take care of people in terms of we'll pray with you and we'll get you connected with people in ways that, like if you're really at the end of your rope, we'll be able to connect with you and maybe guide you to some resources. But if you need prayer, if you're in a really tough spot, you need some care, and it may be not financial resources. Maybe you're just in a tough spot emotionally or other ways. Email us, call us, visit the website, onechurch.to, and we'll do our best. And we love you guys. Have a fantastic night and the rest of your week. We'll see you on the weekend. Okay?
Bye, guys. Be blessed.